had an extraordinary amount of inbound interest so we, being a DeFi protocol, we don't have any marketing or sales or any such thing. Uh, you know, so we get a lot of inbound because Aave is such a, Stani has built such an incredible brand, and so we get a lot of inbound interest from a variety of financial institutions, family offices, hedge funds, asset managers, investment banks, you name it, and also central banks. So we've been doing a lot of work around education and speaking to institutions about DeFi, and really being proactive and in explaining what this technology can do, what it does today, and learning from the policy institutions as well. So one thing that's been very, very clear is that a lot of Western regulated institutions cannot use DeFi unless without KYC, right? So unless every entity or participant has been KYC'd, and there is like a bunch variety of transaction monitoring tools and this and that on the liquidity pools, a lot of Western regulated institutions, given their compliance and risk parameters, cannot use DeFi. I mean, so that message has been very clear. And for us, the second challenge has been how do we get 8 billion people to use DeFi, right? I mean, right now, DeFi has got to, according to consensus, 10 to 15 million users. Now, that's a rounding error when we think about how many people need access to the financial system. And if we just, we're not building this just for crypto natives or crypto wealthy or so on and so forth. This infrastructure only makes sense if it's accessible to everyone. And one thing that's, we have reluctantly started to acknowledge is that the distribution of DeFi will come through TradFi, right? I think not just through TradFi, a lot of users will be Web3 native, and they will connect MetaMask directly into Aave and then use Aave and Uniswap and whatever. But a lot of users still find that experience untenable, right? I mean, it's just too clunky, too complicated. Even NFT influencers keep losing their seed phrases with millions of, I mean,
Yeah.
sorry, that was a joke, but also true.
We see it happen. Yeah.
Yeah, I mean,
So,
the problem is that it's actually true, though, right? I mean,
Yeah.
for most
that's true,
users, the
yeah.
cost of risk of managing their keys is more expensive
Yeah,
than the cost of risk of signing a contract with a custodian.
right.
Which
Right.
Yeah.
So how if yeah,
Well,
sorry.
and
So
we
so,
touched,
so if
yeah.
Robinhood or Revolut or Galaxy or these institutions want to and fintechs want to connect to Aave and offer their customers a high yield account, for example, they need a permission pool, right? That's the only way they can do it under their regulatory requirements.
Mm.
So here we go. So we have just launched the ARC pool with Fireblocks. We call it ARC because ARC is this is the symbolism for the bridge between traditional finance and DeFi. One of the things we chose not to do is we chose not to build a federated architecture where we hide all of the DeFi from institutions, like some of the other protocols have done, and they just send us the money in fiat and we deal with the rest of it, right? So we didn't want to do that. We also didn't want to offer a centralized interface on top of DeFi. The goal of this whole exercise is to bring institutions into a Web3 native DeFi experience. Yes, it's still a piece of work for them, sometimes to get a Fireblocks wallet, open a Wallet Connect API connection to the Aave protocol, and then interact with it in a Web3 native way. But there is a bigger game inside, right? So we want institutions directly involved in the governance of the protocol. That's how we're going to scale from 15 million to 8 billion, and truly Web3. We call it Web3 because we are serious about the web size of it, right? If it's going to be web scale and we're going to go from 25 billion to $1 trillion in liquidity, then institutions have to be involved. Then we're looking at critical infrastructure that will be governed by institutions and other aspects, other parts of the society. So here we go. So we are just triggering a bit of making a small dent in the universe, and then there are 12 other DeFi protocols that want to follow into this environment so that people can build composable applications, financial applications using the software that we built.
Yeah,
Okay.
I mean, I've seen interesting things like I think we touched on it on another pod, but was it SocGen did the real estate loan on MakerDAO as well? Like, you are starting to see a few institutional players interacting with these things, even if I think it was 20 million, which
is a pretty big number for SocGen when you think about it.
Yeah, it's a rounding error for some companies, but it's a big number for them, and it's an interesting.
It's a big number because this is the first time in DeFi that a traditional bank has come in and put some serious money. This is not play money. This is $20 million. I mean, somebody could get fired for that. So it's actually, I mean, they've done a remarkable job of being innovators and leading from the front. I'm a big fan of what they've achieved.